But today the story is Sequoia Capital kind of separating its China, India, and U.S. businesses. Can you just talk me through the why behind that?
Yeah, look, Sequoia becomes three distinct firms, right? Sequoia Capital here, which will focus on the US and Europe, Hongshan, which is the English name the firms adopt in China, and then Peak 15 Partners, which is a reference to the original name of Mount Everest for its India and Southeast Asia Pacific investing arm. And the why is because they are already three largely independent firms. They operate in independent geographies, and what the partners of each regional unit said in the statement is that they're running decentralized organizations with a centralized back office, and it just isn't making any sense, particularly when you consider the competing policy standpoints of the United States and China right now, and the difficulty, not just the difficulty, but the debate around deploying US-originated capital into Chinese startups.
Yeah, and we know that Biden potentially is going to take some action on that front. Just Ed, on the China component, Hongshan, I think that if I look, I need to look at the characters, but I'm pretty sure Hong is red, Shan is mountain, Red Mountain, it seems maybe is what they're going to be calling it. What, in terms of the money that they put to play over the years, very early in terms of deploying capital historically, Sequoia, and they've done well.
And this goes to the core of the story. It's been a largely independent Chinese affiliate for more than a decade, getting in very early stage, deploying a lot of capital, but broadly across a portfolio. The more recent history has seen Sequoia China be involved in some very high-profile listings, ByteDance being one example. But again, remember the sort of ethical debate here in Silicon Valley. Should US-domiciled venture firms taking money from US LPs be deploying that capital in China, either from a competitive perspective, from an IP perspective? AI has put that race and debate really in focus, along with our Bloomberg reporting that, according to sources, Joe Biden is looking very carefully at restricting outbound investment from the US to China.
Ed, I mean, you're in the Valley. Like, what does Silicon Valley think about that? Like, you have to have exposure to China in some capacity, right? So how do you do that? Like, how do you deploy capital, get good returns, but also not perpetuate technology growth or competition in China?
Well, look, every individual firm and every individual partner has a different viewpoint. Many that I speak to say we will not raise money from Chinese LPs and we will not deploy capital into Chinese startups because they believe philosophically that they should back the US horse in that race, be it AI or any other field of technology. And then consider our reporting about the policy perspective. Actually, it's becoming increasingly difficult to take US-originated capital and deploy it into China. And many investors that I've interviewed or spoken to in the corridors in recent weeks would say, yeah, you know, there's a clear backward-looking data tracker that shows VC investment in China is down, but also psychologically, it's not a market that US VCs at least are racing to get into.
And I think you made a really, really interesting, fascinating point about AI, because if the US was not focused on restricting some of these fund flows before AI, then they certainly will be now because of that dual use. And you just think of companies like Megvii or SenseTime in China, which have been flagged as potentially being problematic. So just expand on that. It's the dual use component as well that's important in terms of national security for the US.
Yeah, so you know, think about the restrictions the United States has made on the export of chip-making technology and the latest generation of chips. A concern around that is that it, in one instance, would power development of AI for use in national defense use cases by China. The other side of the debate that venture capitalists here in the Valley point out is that China has a real advantage when it comes to AI because they can dictate policy. They can basically provide the factors that will allow their entrepreneurs to succeed. You know, if China wants to go big on AI, it will go big on AI. You know, I'm paraphrasing, but it's the basic argument made by those VCs that recognize why they need to back US entrepreneurs, because they see China having at least a public sector or government-led advantage in establishing that field.